and that's an attempt to catch a breakout of the previous range of the day before and the current price action. So in other words, we look at, on the hourly chart, mind you, we look at the high of Friday, and if that was the lowest low, including today's price action, we would also look at the low of Friday. That is not the case because we have gone lower so far today. So the range would be the high of Friday and the low of today. That gives us an effective range of about 115 pips or thereabouts. And the quest that we have here is we want to break out of here, right? We're forecasting, well, we're not really forecasting is going to do that, but we're going to play it if it does. That's the whole idea of the breakout trade, right? So what we need to determine is, have we got enough space once price does break out to take some profit? Now, the rule that I use is we need to have 1-to-1 before we consider taking the position. So in other words, if we were to trade long here, we would need to have 115 pips of profit before we hit a resistance level. In this case, we do not. Therefore, I don't want to trade this long because the chances of this going to here and then finding its way back down here over time is quite substantial. So I don't want to trade long out of that position. Do I want to trade short out of that position? Well, there's our short entry there, and there's absolutely nothing underneath. So I'd be happy to go short, no question, but not happy to go long. So the challenge becomes, can we trade the breakout with that knowledge? So what I'd be expecting to happen is if we traded long, we would hit resistance and then come back down here. We'd be in a trade that we don't want to be in, right? If we went short, happy days, but that doesn't mean we will, and it doesn't mean we will immediately. So on that basis, I'd be saying, okay, I don't want to trade the breakout, but I do want to trade short. And I only want to trade short off a resistance area. So I'll wait till I hit a resistance area and maybe look to trade it short from there. Best case scenario today for me would be if price came up to this area here, broke through the trade line and the daily pivot, found some support maybe at this level here, and got underneath the trade line, retested that area, the confluence area, then I could look to trade it short. That's the only position that I would like to take on pound US dollar today. Oh, please share my charts. Paul, I'm terribly sorry. That would make a heck of a difference for you guys, I'm sure. And my apologies for that. Okay, so just very quickly, as I said, here's the range today. There is a lot of air to the short side, so we could easily get 1-to-1, but there's no air to the high side. We can't get 1-to-1 before we hit those resistance levels. So that's why I don't want to trade the breakout. What I would be interested in trading, however, is short pound US dollar if we get the opportunity, which would come as a false break of this trade line and the daily pivot. So that's what I'd be looking for. Price up here, consolidate, back underneath, retest the confluence, then we can look to go short. And again, that's the only criteria under which I would like to trade the pound versus the dollar at this time. There is another option, and that's to trade counter trend long to that area. From here, risk to reward is terrible. And the fact that we're trading super counter trend, super counter momentum, if you have a look at the daily chart, that's the momentum. That's also the trend. You're really taking high risk to trade that long at this moment. That doesn't mean we can't. We just have to, or we need the right setup under which we would then consider. That would be a chart reversal pattern, like a double bottom, a bullish engulfing bar, the usual suspects, inverted head and shoulders, Morningstar, you name it, they're all there in the conventional wisdom section of, whoa, that doesn't need to be there. My apologies. Okay, Marlon, are you able to handle that recording that George has just posted in Skype? I assume you are a member of that Skype group. If you could just let me know, that would be great. Otherwise, we might have an issue with that at some stage. So that's the pound. Look, I was speaking earlier about being confounded by what the market throws up at times. And if indeed, sorry, cheers, Marlon. Getting back to where I was. Sorry, I've got messages all over the place here that's distracting me. I never get surprised these days, I guess, at what the market throws up, but sometimes you just shake your head and go, why? But they're really the times that you need to sit down and concentrate, because if the market is actually doing something that confounds you, you need to answer two questions. One is, why? And two is, can I trade against the market? And I can't answer that question from your perspective. I can only answer it from my perspective. Okay, no problems, Marlon. I'll sort that out a little bit later. So where am I going to? Well, here's a for instance, right? Euro yen. Last week, I was very much of the opinion that we could trade Euro yen long if it came back into this descending channel, which it has done. It has done with spades. I also said that if it comes back above this trade line and gives us a false break indication, which it has done, I would look to trade that. Now, had you traded that, you would have been in a world of pain and almost taken out. Yet, here we are now back at that exact level, or pretty close to that exact level. Now, this is something I'm actually working on with my strategy, and I haven't even got a name for it yet, but it's actually trading my system. Sorry, I'm still getting messages. It's trading my system as a second attempt rather than the first attempt. We'll get to that weeks down the track because I'm about to go into that test, forward testing it. That would make it necessary for me to replace this order, or place this order now rather than in the first instance. So I could go long here with my stop loss underneath that bar, which is the exact trigger bar that I'd be looking to trade in the first place. Now, I don't want to get too complex here, but I can't trade this long if I'm actually serious about what's going on in the world right now. How can I possibly go long euro versus the yen? It doesn't make any sense to me. The euro would be, and I haven't checked my FinViz, but I'd be surprised if the euro wasn't the weakest currency on the board over the past month. And the yen is deemed to be a safe haven currency. So how can I possibly trade this long? Okay, 30-minute chart, 15-minute chart, 5-minute chart, maybe you can scalp it. But from a considered opinion point of view, I just don't see how you can trade this long. So I'm opting not to do that. And I know I say often that you've just got to trade what you see. And what I'm seeing is a potential false break of this area. But I just can't bring myself to do it. I'm sorry. If you can, then go hard. The trade is still there, and you've got a very clear first take profit area here. And you've also got a very clear get out area up here. Can't do it. Look, I think there's quite a few of those sticking around at the moment. And I guess it depends on whether you are going to throw fundamentals into your analysis or otherwise in consideration of these trades. I'm, again, was dead keen to trade the Aussie short last week. I've also got that set up as a false break, clear false break of the resistance trade line. Yet, given what I've heard in the past 24 hours, and there's some massive news about, and I'll bring Ash in a tick and tell him the biggest news of the day. But I can't trade the Aussie short at the moment against pretty much anything, because there's about to be struck a trade deal between India and Australia. Now, China has put a bit of a handicap on Australian, let's say, trade in the past couple of years. Now, this has been brewing for quite some time, and indeed a couple of years, where India has been flagged by Australia as filling that void that China has created via sanctions and tariffs. So I find it very, very difficult to trade against the Aussie at the moment. There is a core fundamental reason to do so, given that Australians, or the Reserve Bank of Australia, aren't likely to raise interest rates anytime soon, or they have repeatedly said that they're not going to do that until they see the circumstances that aren't yet prevailing. So for that reason, it makes it very, very tough. I've got to err on the side of caution here and not trade the Aussie short, although it is telling me that the chart wants it to go short. Very, very interesting time in the markets, but I've really got to marry the fundamentals with the technicals before I get interested in trading this market at the moment. So therefore I rely on Ash to tell me what's happening with the fundamentals, and I'm going to bring him in now. But the biggest news of the day, she's got nothing to do with the war. It's got nothing to do with the Australian dollar. It's all about Tom Brady.
Oh, unbelievable!
He's back. He's back.
Okay, well, can I just? I don't know whether you know the worst part of this story, but somebody bought his final thrown touchdown ball,
yeah,
for $500,000, and if he's back, then he hasn't thrown the final touchdown ball. So he'd nearly have to
give it back, wouldn't he?
Yeah, well, I mean, is he going to get his money back? Because somebody caught it in the crowd. So that person in the crowd has sold it for $500,000.
Is that how that works?
Yeah,
right.
I think it could be quite a messy scenario, because in a way, well, I mean, you can't really accuse the guy for false advertising, because that's what was true at the time. But obviously now it's a different matter. But yeah, Tom Brady back. I can't believe it, mate. I guess he probably sat around for the summer and thought, I don't like life without going into training and, being around the dressing room. So
totally,
which I kind of understand. I mean,
and they'll probably throw another 20 million at me to turn up.
Exactly. Do you know the only thing
might as well do it.
Is that Tom Brady's quite a considered man, and I'm surprised that he hadn't thought this through beforehand. But all the permutations through beforehand. But maybe as you say, that they've made an offer he just simply can't refuse, because the time's got to be fairly soon for him to be retiring. But yeah, it is the news of the day. Also, the news of the day is a sit around the table between Ukraine and Russia, which may well promote some upside in the market. I'm seeing the FTSE 100 for me. I have taken a long in the FTSE 100, and we can discuss that in a little bit of detail now. But if you're done with your analysis, mate.
Mate, there's a bunch of stuff to look at, but I'm not about to enter the market, I've got to say.
Well, let's talk about some of the things that you've mentioned. Australia, yeah, you're absolutely right. I've heard nothing from Lowe to suggest that there will be an interest rate hike. Do you know the number? And you can probably shine the light on this a bit more. The building approvals number from Australia was atrocious. It wasn't bad. It was the worst number that I've seen for many, many years. Negative, what was it? Negative 227 something, negative 27.9% down on building approvals. Now, I would suspect that in Australia, building is quite an important aspect for the microeconomy. So I don't know whether that's a red flag. Well, it is a red flag. I think it's not a significant number yet, but As I say, you could shine some light on whether a building approvals number does make you sort of go, that's a little bit of a concern, or whether
Not
it's
at all.
just not a concern.
And the reason I say that is because I can't imagine that any country in the world is going to have building approvals up at the moment, given the rate of inflation that we've got. Because, in particular with resources, the fundamental building blocks of a building are timber, bricks, and mortar. Which are astronomically inflated at the moment. So
Yeah.
I don't. And look, the stories that I hear throughout the country, indeed in my own state, is that you get a quote for a house build, for instance, in January, and that quote is 20% more in March because of because of fuel, because of all these reasons that are stacking up. So I can't imagine that there'd be any country in the world that would be having increased building approvals at the moment.
Okay, mate,
so I tend not to make that a thing.
Just to give it some context, that's the worst print since 2005. It was, it does fluctuate between positive and negative every now and again, but it was a dive. It was a huge dive. It was like it went from last month. It was at 9%. This month we're down negative 27%. Now I don't know. As I say, I suppose maybe the point of this is if you are looking at Australian house builders, you say I would go short Australia house builders versus long US house builders as an example, because those numbers aren't anywhere as bad. So maybe that's more the trade there rather than the Australian dollar being affected. So okay, I'll take your point on that one. The market, generally speaking, is okay. Which suggests that the Aussie overall, if you're looking at the kind of macro sort of picture, is okay. But as you say, they don't look to be keen on raising interest rates, so they're probably not moving. Europe is okay. The euro is actually looking all right, and I think given the fact that the euro did plummet so deeply against most other currencies, and it is in a seasonal long as well, it would suggest that if things were to calm down, the euro actually might be a decent place to pick up some opportunities. The yen still, the Japanese economy isn't really kind of firing on all cylinders. So a long euro yen, if things calm down, makes a lot of sense to me. But I get your point. It's difficult because you just don't know what's coming next. You don't know what the permutations might be after this meeting. You don't know what the permutations are going to be in the next week. So difficult to take trades, and hold on to them for the longer term. But the market looks all right, and it would suggest to me that the gold is probably going to sink a little bit. I guess I'll just come to my charts just here briefly here, because I am looking at global equities. I have, as I say, taken a long in the FTSE 100, but I think I'm a little bit early, and I might have to go back in again. Where is
sure, Musa? If you could just expand on your question. Do you mean the technical indicator that I've got on my chart, or do you mean the fundamental indicator, please? If you could just help me out there, I can answer your question. No problem, and thank you for it.
Okay, let me bring this up here. Got it. Exit. Okay. Right, so let's have a look at this. So this is the NASDAQ. Actually, no, the FTSE trade is I'm in just here, but really I'm going to probably with a take profit of these areas here, which I think is nicely under the overall area. Now I'll give you some numbers in a moment. This is the upper trend line, which has already been kind of almost rejected once at the end of last week. So I'm well under that particular area, around about this gap. If this bar does take off, the entry is above 2 hours ago. Effectively, if you count this as 1 hour, the last hour and the previous hour, it's just on the top of that bar is the long. But I'll probably try and take another long down here at the daily pivot. The market looks okay today. And it would suggest to me that that maybe a simpler trade might well be gold to the downside. And I'd probably want to get it at the top end of this range here, around about this daily pivot. And the reason for that is that I would suspect we're probably in that kind of rangy kind of market today at this stage. I mean, things change on a heartbeat. So at this particular stage, and you can only go on what you see, as you said, Jeff, you got to trade what you see. And what I see right now is a potential range. And what that is saying is that I don't see gold, or I don't anticipate gold all of a sudden starting to take off to the upside and get through these areas. So that would suggest to me that the most likely next move for gold, if it manages to come, let's say it did manage to rally itself up to this area here, the next move I would anticipate would be to the downside. And what I'd be probably looking for is, depending on where the take profit area would be, the lower end of this point here, which I'm going to make white, the lower end of this point here, or possibly this low down here. I wouldn't be looking at a gold short over the long term. I'd just be saying, is there enough in the way of dollars to the downside in comparison to dollars to the upside? So if I'm measuring this, if this is to come down there, that's going to be around about $10 from around about the daily pivot to this lower line here. So $10 puts the stop at around about 1993. And it's just above this area, just on this area here. Not high enough, in my opinion. You're going to need to get it up to this point here. So I would have thought if this is going to be entered, then you're going to need stops at around about 1996, which means that you could probably just about do it, actually, mate. Maybe a 1-to-1, but you definitely want to enter on the daily pivot with a stop up there if you're going to take that particular approach. It
Mate,
may
you've got a classic slingshot pattern there.
Oh, if this was to play out here?
Yep.
Yeah. It's not one of those things that I would see as being all that likely to really start to motor today. I think we're probably going to be stuck in a bit of a range, and you can probably trade that range. When it comes down to the FTSE, I think I might well have the top end of the range if this plays out, which means the bottom end of the range is also around about this daily pivot area. So I'll probably take a trade around about the daily pivot to the upside again. Yeah, it's going to be sort of looks like it's somewhere around about here. I'll be taking another trade long, and with that one, because the area is going to be around about 80 pips, I'll probably come out around about 60 to the upside. So I'll lower this down, lose 20 on that one, and look see if I can make 60 on the other one, and that will even things out a little bit. So yeah, difficult. It could be a difficult market today, mate, but it looks a little bit bit rangy, and I'll be treating it as such. So taking trades at the perceived lower end of the range and closing things out when it gets to the upper end, not expecting a trend. Maybe it's because of the meeting, maybe after there's some announcement about how the meeting went, then we might get some movement later in the day. But for right now, I don't really see us doing too much. From David, Ash, I've decided to. Sorry, mate, go on.
No, you're right.
I was just going to read this. Yeah, decided to trade levels this week. Got a short on the pound CAD, 1.66916 limit orders. Okay, let's have a look at that. Short on the pound CAD. No, really, I should. Somebody keep an eye on the FTSE for me, and I will. Actually, no, you don't need to. I'll be okay. Pound CAD. Right, now I like this. We've got levels and everything today. So we got short on the pound CAD 1.6691. 1.6691.
So you got short last week, David, because we haven't hit that level yet.
Oh, is that no? I think what he means is he's got an order. Is that right?
Okay.
Trade level this week. Limit order. Yeah, you're doing a limit order from this point. Yep, that looks good. So And I'm guessing this is off an hourly. 30 minutes. Okay. Yeah. Well, that would be the correct approach. My only thing with this is there's a weekly pivot just above it. So this is more of a band, I would have thought. And you might well hit that weekly pivot. Let's just double check. Now your stops are obviously going to have to be above the upper end of that range, because what you're effectively saying is this area before was the range, and that area before provided structure. So we were talking about this the other day, and this area here is the structural area of where the last trade came down, last area of a range came down. There was support. It kind of came to this area for resistance, came down to support, went up to resistance, and then it went through. So that made this whole area here the structure. The structural trend is from here. So to get above it is going to be around about here for a stop loss, and to enter on the limit order would be down there. And then yes, you're entering to go further that way. Now let's have a look at this on longer term timeframes, because as I said, and Jeff may or may not agree with this, but I wouldn't want to just look at the 30-minute. I want to make sure that the daily also is providing it. And yeah, you can see that there.
100%. Yeah.
So the daily's pretty good too. You know, that's a breakdown there of the daily. I mean, my only question is here is that when you look to the weekly, we're at the lower end of that range on the weekly, and you know, you may grab something. I wouldn't anticipate this though. You know, if you're looking to take the trade, I wouldn't really want to. I wouldn't want to hold on in the longer term and look for this to come down all the way down here. I don't think, not without moving stops. I'd want to sort of you know, I want to make sure that I move stops in place, and rather than just expecting it just to come down there without management. But I quite like the trade. I mean, if you know, fundamentally, the CADS is still surprising to me. Why hasn't the CADS kind of picked up more after the you know, because of what we've seen with oil?
I've been saying that for months.
I know it's hard, isn't it, mate? I mean, I wonder whether it might have been something to do with those protests. You know, around the COVID vaccine with the truckers and all that kind of thing. It kind of shut down the government a little bit. Maybe something to do with that. I don't know. That seems to have cleared up now. The numbers from Canada are pretty good. The numbers from the UK aren't bad either, to be fair. So, you know, fundamentally, would you pick the CAD over the pound right now? Maybe a shade, but it's not really. It's not you know, it's not that clear. I don't think so. You know, that would be my only thing. But if you like the trade, if you like the analysis, and I would agree with the area, I would say that the weekly pivot would be better. And the reason I would go for the weekly pivot is that it looks like when you look on a 4-hourly, that area there looks better. So maybe a little bit higher for an entry around about the 16752 area. So wherever the weekly pivot is would be more agreeable to me. But how do you see that, Jeff?
Yeah, look, not a trade for me at that level, I've got to say. But if it does reach your entry level, David, I'd be prepared to trade it down to where it's come from before I take profit. Oh, sorry,
down here,
I would have to take profit. Yeah, there.
Yeah, not the daily pivot. Wouldn't the daily pivot concern you? I mean, I'd be looking for a bounce down here.
Well, how much have you got room for that?
Well, it depends. If you have your stop up there,
it depends where your stop is, I suppose.
Yeah, if you have a stop up there, there's 51 to the upside and looks around about 51 to the downside. So you'd be
well, there's your TP one. Yep.
Yeah, and you know what? One of the reasons I'd want to do that as well, mate, is that if you have got this area looks like a great area for some resistance, because you've got the weekly pivot here, so that area looks right, and it does have some structure here as well. The reason I'd want to take profit of the daily pivot is that what if you're wrong and actually the trend is moving to the upside, and if that's the case, then this is actually, you know, a structural point to the upside, particularly if you look at this this trend line along here, which means that if it's going to reverse, it may well come up and come back to this area, come back to this area, and that's where it starts to form a base to start going long.
Yes, you're probably wrong there. Yep.
Yeah, and if you're already out the market, or at least if you've taken profit and moved your stop to break even on the second half, at least then you've got something in the bank. So that would be sort of the way that I would probably I'd probably view that.
Agreed.
Yeah.
As I said, very, very difficult for me to go short at the bottom of a range because I trade ranges and I trade them to the upside, off the bottom and downside to the top. So not for me, but again, 100% right in terms of your thought process, David, I believe, because fundamentally, I disagree with Ash. I think the Canadian dollar has got far more going for it than the pound at the moment.
Yeah. Yeah. So I suppose the other thing is to make sure that the trade is logged, and then you can sort of like see whether this is the right approach. But again, it's just to emphasize that that the trade by trade basis is not the way that you need to do things. Just trade what you see this time, note it down, make sure that it's noted in a way that you're able to kind of do almost something scientific on the test of it, and then in 20 trades see if whether this limit order is the correct way to do it. Because as you say, more often than not, you're correct on direction. It's just about your entries and everything else. So if you can just get those bits tweaked, then you can really start to extend your legs with the trading, and you can't really tweak them unless you note it down. So I would encourage you to note it down as well, mate, if you're going for this. But very good, like it a lot.
Hey, sorry,
on,
if there's more.
No, I was going to say, do we have analysis from George this week?
That's exactly what I was about to say. I was about to say, hey guys, do you want some 5-minute trading action? Then let's see what George has got in his kit bag today. Marlon, if you could play the recording, that would be fantastic. Thank you so much.
Hey, trading buddies, I trust you all well. Ash, I don't know, I can't remember how far you live off the coast, man. So please excuse me.
About that far.
But Jeff, this probably won't mean much to you. But we took a few days out of busy Johannesburg just to come out to the ocean. And these are just the views. Today is pretty cloud covered, but it's our last day. We've had a beautiful 4 days. So that's where I'm doing my recording from. But I'm gonna switch off the video just after sharing the screen so that we don't distract the guys. And let's have a look at just a couple of things that I want to discuss very quickly. So here's a few things that I look at. And typically, I don't talk much about these things because it just happens at the back of my mind. But I was just thinking about what to share today, and I think it's very important. I talk a lot about looking at the low of yesterday, the high of yesterday, looking at, you got to set these key levels if you're trading intraday, like I do. Open of the day or open of the day must always be in there. But there's something else which is always at the back of my mind before I start the trading day. And I'm always looking at where price action is on the daily in relation to the 10 EMA, that's an indicator of breakout strength for me, and also the 20 EMA, pretty key level of support or resistance. But specific for today, I want to just suggest to you guys that you really learn or force yourself to look at the 3 days before yesterday. So before the previous day, the 3 days before, it just focuses you on the market and looking at what's actually been taking place in the market. So here are the 3 days before yesterday, that inside candle, bull candle, bull candle. Now, clearly you can see the market was in a pullback. It got within those last 3 days to the 10 EMA, failed to close above it, got an inside candle, good for the bears, but the bears failed to put a low to close on or near the low, which is an indicator of strength. Inside candle would have been a good breakout candle, breakout pattern for the bears. But then the day after, despite the weakness shown by the bears, that's yesterday, we then had a trading range. So coming in today with that 3 days prior to the previous day, having a look at it, you're going to be expecting that this trading range is pretty strong. So any breakout above it, you can look for a failed breakout above it and pull back into the trading range, which you can trade back in the trading range. The bears reassert themselves because we are this low and that they failed to close beneath, give us a low close on this day. We also look for a failed breakout and they pull back to the trading range. However, if the bulls are strong, we're going to think of measured moves, right? Measured move above the trading range, which comes to test this level here, which is high of 2021. That's an area to look for shorts. Or if the bears are strong and they now give us a close to a measured move, then we can start to say, hang on a second, possibly double bottom. Let's see if we can come back up, or if the bears are strong, acceleration down. So that's on the UK 100. Another interesting one to look at for the session today. Again, same kind of thinking that I'm trying to emphasize. There is previous day, yesterday, low of the day, but also we are in the zone of the high of 2021. So pretty level, strong level of support. We also have the high of yesterday, but let's look at the 3 days before yesterday. 2-bar reversal took place, so indicates pretty strong level of resistance here. Bears had a chance at that time to come and at the test of the close, test of the 10 EMA, give us a close somewhere beneath there. And if they were strong beneath this level of support, which was high of 2021. But they failed to do that. And if you look at the price action above the 10 EMA, so all the selling we're talking of has turned out to be bears taking profit because the bears are failing to put a close beneath the 10 EMA. So if you look at these last 3 candles, it suggests for us that the market might just bounce off here. It might give us a double bottom, an attempt to break beneath this today, but there is still opportunity for the bulls to break above here, but they're only going far as a level of resistance. But if you trade in intraday, if you get that breakout, good enough profit opportunities for you. Last one, very quickly, same kind of thinking, very interesting on the euro. So this is yesterday, good bounce off the 10 EMA, good for the bears. But let's look at the 3 candles, 3 days before we got to yesterday. So the market pulled back. Yes, it did. Got to the 10 EMA, had a close above the 10 EMA. So this is the indicator of strength. So bulls had the opportunity to close strongly to give us a follow through above that and get to the 10 EMA. They did give us that, but they bounced off the 10 EMA, which indicates that the bears are still strong in the market, and that reversal very good for the bears, follow through good for the bears. So today, if you're in the market on euro, you gotta be looking 60% chance. I'm 100% right 60% of the time. 60% chance that the bears will break beneath this low. And if they do, what are they looking for? They're looking to close beneath this previous low, which was when the market turned and pulled back and was profit taking. But also, if you look at this Fibonacci expansion, leg 1, pull back to the top of the pullback. So a little bit more precise. If you wanted, just plonk it there. First leg, pull back, perfect low 1, first pullback after this breakout, absolutely perfect for you to look at. And of course, we got triggered in, but they're looking for low 1, leg 1, pullback, leg 2. So there is the goal for the bears, an extension of that first leg, equidistant extension. But they also would like to close beneath the measured move of February's trading range breakout. So if you go to the month of February trading range, okay, so the bears are strong. Yes, they break beneath that, but they have to close beneath the measured move of the trading range to give us indication of continued strength going forward. So guys, I think that kind of thinking yesterday, of course, but then 3 candles before will give you opportunities and where your certainty should lie. So hope you enjoyed that. We will catch up with you on Wednesday, live trading profits, which is 11:30 GMT on Wednesdays. But also, if you have subscribed to my Wednesdays at the market, free one, second Wednesdays, but Thursday and fourth is open only to those who have subscribed. So 8 hours together in the session. Cheers, Jeff. Cheers, Ash. Thank you, guys. I shall enjoy the rest of the day on the beach.
Yeah, you go and enjoy the beach, George. Ash, very much attuned with where you are. I used to live on the coast and thoroughly enjoyed my time, but I've got to say, living on the coast has its drawbacks. And frankly, if you're not in a shipping channel or you haven't got whales passing by, as I used to have, and you haven't got a boat, it can be just that little bit frustrating because you can't get out there, you can't see the whales, you can't do this, you can't do that. But I'm happy that I now live on a river rather than the ocean, I've got to say. The wind is still there, but it hasn't got that bloody salt, and the pigeons don't shit all over my place either. Oh, not the pigeons. What do they call those things?
Seagulls. Yeah. Yeah.
But he's obviously having a good old time there. Euro dollar. Of course, it is pretty much a proxy for the dollar index. And going back to what we were talking about before, mate, which was the euro and its prospects of rallying.
Yeah.
I'm kind of seeing that it's possible, but from the chart, but I'm not convinced that it's probable. Had we kind of stopped here, maybe I would think, okay, the chart's telling me it's got possibilities to go long, but really when I look at this, we've had a pretty strong breakdown of the broadening pattern and a retest of that. It appears to me that we're going to have another crack at this low. Maybe not, but I'd need to see something convincing before I'd trade euro versus the dollar long at the moment. Given that the dollar index is at a strong resistance level, as I think I pointed out last Thursday, I can see it's possible for the dollar to relax a little bit. We are at the top of this very, very swift ascending channel, but we are above, or are we, this monthly trend line. And that is telling me that we're headed probably to have another look at these highs here, which is what, 103, sorry. We've been there before, obviously, and came off it very, very swiftly. I see no reason why we won't revisit that area, to be fair. But there's a little bit of headwind before we get to that point. So maybe this can come off a little bit, maybe retest that trade line, or trend line rather. Again, it is a monthly trend line, so it's got to be respected. So I'm probably
Fed week this week as well, mate.
Sorry, mate.
Fed week this week.
Ah, yes, Fed week indeed. That you wouldn't think, unless they go 50 basis points instead of 25, you wouldn't expect the dollar to turn around. Well, if they do go 50 basis points instead of 25, I can't imagine that the dollar would turn around. If they only go 25, then maybe there is some downside to be had here because the market's priced this in well and truly.
I think they probably will go 25. I mean, and I think that there's probably some there's probably enough on the other side that would believe that they probably won't do the 50 basis point hike. So there could be some downside. We've got the Bank of England this week as well, which puts David's pound CAD trade in an interesting position because there will be some movement in that particular trade, and also it diminishes the chance of breakout. You know, when you've got an announcement coming, so trading the upper end of the structure to the downside and maybe taking those profits is probably even more wise given that fact. It's actually quite a big week this week, mate. GDP quarter on quarter as well from New Zealand.
Thursday. Yep.
Super Thursday. Yeah, there's a lot going on this week, so could be some movement. Today looks a little bit sleepy, not a whole bunch in the way of news, but there's quite a few bits and pieces going on. You've got Australian minutes overnight as well. Again, that could start to push the Aussie around. Yeah, I mean, it's an interesting week for people that have a specific approach. And you know, I think there's always this blanket suggestion: don't trade this, don't trade that. But actually, if it's involved in your approach, you know, you can take these positions when they become available. You know, if you do well when the market is a little bit more uncertain, then it's wise to take these things on, I think.
Yeah, look, you can either be you know, holers, bowlers, let's get in there, let's make some money. And you certainly can in this market. There's no question about that. Or you can be Mr. Conservative like me, who just is going to wait until the perfect scenario appears. It never does. We all understand that. But you have to adopt your own. Oh, hello.
Oh,
Who we got?
I don't think it's meant to be. Can you mute? Oh, there we go. There we go.
I thought we had an inspirational instigation of anything there. I've got no idea what it was.
No, well,
anyway.
I mean, you know, as always, anybody can come on and have a chat, mate, and
welcome to do so. But just got to let us know.
Yeah, just hop in there and let us know. But as sort of like things stand at this stage, mate, I mean, as the market looks quiet. Looks very quiet. The FTSE. I put in another order on the FTSE 100, which I can show you guys later on. Anything else you're looking at though, mate? Before we
yeah, look, there's a stack of stuff, mate, and like I said, I need to wait for these to set up, and I could be waiting for 3 months before they do, but I'm prepared to do that.
Yeah,
and I'll start with Euro Aussie. Euro Aussie, from a fundamental point of view, to me has to be a sell, but wow, look at the momentum. That's a daily chart, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 of the last 20 days have just been selling. Okay, we've had a few indecisive days in there, but they've just been selling and selling off. Oh, am I going to say for good reason? Look, my synopsis of the Euro versus the Aussie has changed a little bit, but not a whole lot, to be fair. I was looking to sell the Aussie as late as last week. I have changed my mind on that. And look, I don't know that this has even hit the news yet, but like I said from the outset, the India-Australia trade deal, which, as I understand it, is just about to get the ink on paper, will make a massive difference to Australia, in my humble opinion. India, we're going to have to buy some Australian dollars to buy Australian product, and if that goes into, and I think I've been saying this for years because a mate of mine who's in the coal industry said that the demand from China, if it went to zero, would be easily replaced by the demand from India, which is forthcoming. That, to my mind, Australia sells coal to India, but I don't think it's on the scale of what is proposed or what was indicated to me. And now they're talking agricultural products and a whole gamut of products going from Australia to India. And I can't see that being bad for the Australian dollar, frankly. No, it hasn't been done, hasn't been signed, but I would have to take the approach that if it does get signed, the minute it gets signed, the Australian dollar will appreciate substantially. And I'm led to believe that will happen in the next few days. Now, that doesn't mean go out and buy the Aussie, guys. It doesn't mean that, because that's a rumor. It's not a fact, and we don't know that that's the case at the moment. But in my opinion, I am going to look to position myself to go long Aussie versus something. And if I think versus what, I've got to think probably the weakest currency I can find. And then I go and look at, well, what's the weakest currency I can find? And I come to, I can't even bring it over here. I'm trying to bring you what I'm looking at. Here we go. I then go to this chart, and this chart tells me that over the half year, so the last 6 months, Euro's been the weakest, yen's been the second weakest, pound's been the third weakest. I go to the quarter, and I've got the yen the weakest. I've got the euro the second weakest. I don't need to go outside that pair, right, because they're recurring. I go to the month to date. I've got euro third weakest, yen second weakest. I go a month back. I've got the same thing in reverse order. Doesn't matter what's happening this week because it's Monday, but I've still got the yen back here. I've got the euro having a rally today. Doesn't mean a whole lot on a day like this, in my humble opinion. But look where the Aussie is. It's dead last. That's a good thing, not a bad thing for me. Yeah, mate, go.
Well, just interesting on this. I mean, when you look at the chart, particularly of the Aussie yen is at a significant resistance point. And I guess it's the same. You know, you could probably argue the euro has some support against the Australian dollar. And I guess this is the thing. If you look at the strength indicator, and what you've managed to do is pick the point where it's rallied so hard that it's been, you know, strong, and you know, one's been very, very strong, one's been really, really weak over the month, over the week, over the quarter. But actually what you've done is managed to kind of open up FinViz on the day it's got to that significant resistance level. Then, you know, do you then sort of like have to go, I'm going to have to take this information with less validity now because we are already at that significant level of resistance?
No, because I put more emphasis on it because of that very reason. If this is strong today for one day versus 1 month, 1 quarter, 1 half year, 1 year, then that means I'm getting a good price on it.
Gotcha.
To me, you know, that's what it means to me, and that's how I kind of unravel that situation.
Yeah.
Whether I'm right or wrong, and as always, the timing has to be right. But you know, in the back of my mind, the only logical conclusion I can come to is that I have to buy the Aussie versus the euro and potentially versus the yen, where I don't want to, because certainly not the yen, because, you know, traditionally we've got a safe haven currency versus a risk on currency. And how the hell are we in risk on territory at the moment? That's what I can't equate. And when I first opened the show, that's exactly what I said. My head is telling me one thing, chart's telling me something completely different.
I think that's really interesting.
That's where it becomes a challenge.
Yeah, do you know where I think that's quite interesting is because almost what you could sort of like start to have the approach where you're saying, if I am in a risk on environment, trading the euro versus the Aussie is clever, because what you're then saying is that if they are both you know, if all of a sudden there's something terrible that happens, then they're both going to come down, but the Aussie will be stronger because of its commodities and everything else. And also, I believe that it's going to do better than the euro in a risk-on environment because of the same reason, and also the expansion should lead us, you know, to the upside. Whereas if you're in a risk-off environment, then you are gambling a bit more, I guess, if you're trading Aussie yen, as to your point, really. Because even though the Aussie may well have a better economy than Japan, it doesn't take much before the sentiment beats anything that the data is currently providing. And in a risk-off environment, then sentiment is very, very difficult to trade against. So it does actually make, you know, the euro Aussie a more sensible trade. I suppose the only time that you would say the Aussie yen is the right way to go is if you are all out and out bullish or out and out bearish, I guess. But even out and out bearish is difficult because those things tend to happen fast, and trading to the downside is easier to make money quickly, but harder to actually stick with it because you know, things don't. They do tend to be kind of like these huge explosive announcements and these huge explosive moves. So if you're looking at the euro Aussie right now, I guess we're saying if there is a problem globally, they're both going to suffer. But for right now, who's in the best position to expand? And from what the central banks are saying, Christine Lagarde was a lot more hawkish last time out than people expected. And I guess when you're looking at the Aussie, are we waiting on the announcement overnight today? So at 12:30 a.m., I've got my time. We've got monetary policy minutes meetings. Are we waiting on that to give us an indication of how the Australian, the Reserve Bank of Australia are looking to approach the next 12 months, because does it then become a comparison against the two statements in a way, one from the ECB and one from the RBA? Because if it was that, and the RBA, continue on what they're saying, actually the ECB is probably going to win the argument right now, because their rhetoric was a lot more bullish, comparatively speaking, than they'd been previously saying before.
Totally. And look, once upon a time, the only thing that mattered was the interest rate differential between countries. That seems to have dissipated somewhat, if not disappeared altogether.
Yeah,
it's kind of the same thing now as anything that fundamentally is announced is kind of cushioned or not as important as what's going on in Ukraine, for instance, or not for instance, as what's going in Ukraine, full stop.
Yeah.
And, it depends on what happens next there, as we've said all along. And now we've got reportedly, propaganda or not, I don't know. We've also said this from day one. What do you believe? What do you believe the news services say? And if you believe what the news services are saying at the moment, they're saying that Putin is calling on Russia for military support.
For calling on China,
calling on China for military. Holy snap and duck shit. If that happens, then the Yanks get involved instantly.
Yeah.
And we had an American reporter shot dead yesterday, apparently.
Yeah.
Is that going to go down well with the Americans? No, certainly not.
Yeah.
So the potential for involvement from a military perspective, from the Americans is now way more than it was this time last week.
Yeah.
And these are the chops and changes that we're going to go through in a conflict situation, and that's what makes the volatility so hard to predict. I find it impossible for me to think the market can be risk on. And that's the thing I have to kind of get into my head. I can't trade against that. And that's why I can't trade. I can't trade short. I can't trade long Euro Aussie. I can't trade short Aussie. What was the other one?
Can't trade long Aussie yen.
I can't trade long Aussie yen, no.
Yeah.
But there was another one I can't trade. And it's set up perfectly. Can't remember what it was. Aussie dollar, there you go. I can't go short Aussie dollar, though exactly what I've just said dictates to me that I should go short Aussie dollar.
Yes.
Because the dollar should strengthen with that risk off scenario.
Yes.
And that's why I say it's really, really tough to find good trades. Maybe we should step outside. And I said this a couple of weeks ago as well. We probably need to, I need to step outside of the risk on versus risk off currencies and trade something like Aussie Kiwi or Aussie CAD, both of which should be affected equally no matter what happens.
Yeah, mate, I think an interesting discussion really on how you trade in an environment such as this, because that the overall longer term view has to be that this is going to be negative globally. And even if we're not talking about the conflict, then we're still talking about inflation that is because of what's happened over the last 4 years, really, COVID included. Inflation is so out of control that recession is looming, and there are now recessionary indications from the bond yields and the curve flattening, where the 30-year is coming, the 30-year yield is coming down, where the 10 and the 2 years are starting to go up. So you get this kind of like squeezing of longer term yields, and that is an indication of recession. So there's quite a few things, and I make you absolutely right. If you are looking at the market in that way, then really looking at long risk on, risk off, and short risk on is probably the easier way to go. And then, maybe you're waiting for those setups. Maybe they're the ones that you kind of like, have to sniper in on. Or you do, as you say, where you just pick two currencies that are less involved in that whole kind of melt up, and you go for like, Kiwi or Aussie Kiwi or Kiwi CAD, or, you just trade commodity currencies.
Yes.
Or just trade pound euro or something like that, try and group them together. Maybe trade Swiss yen, you do it that way. I guess there's that approach to it as well.
Oh, talking of which, Swiss yen, now you're talking. It just cannot get out of this range. Unbelievable.
Yeah.
And, we need to take advantage of that. We really do.
Yeah, well, I was going to say, that's a good thing, isn't it?
Yeah, totally. It's now tried again to get out of this range. And it just can't. How long have we been in here? 4 weeks? Yeah, even more, probably. And look, it's tough to catch, I've got to say. But here's the best indicator that I can actually give you guys as to where this is going. False break. I'm dying for another false break up here, because that gives me the three little Indians that I want, and they're at a perfect level, which has come back inside this long term, but going back to 2019 here, this long-term ascending channel. If I could just get this up the top here and back underneath or back into this range, I think that'd be a cracker of a trade, and your target's pretty clear as well down here. So about 300 odd pips away. And I think you can get in fairly cheaply here when it does come back into that range. Eventually, in my opinion, this will break down to the low side. But at the moment, you've really got to just treat it as a range, because it just can't get out of its own way at the moment. So, yeah, I think that's a really good one to look at, because I don't think it will be affected greatly by whatever happens in Ukraine.
Decent head and shoulders.
Yep, sitting there. But
yeah, it won't, because the number, and this is the interesting nuance about some of these currencies as well. I would look at the numbers for the euro. I'd look at the numbers for the dollar, and most of the other currencies. But there's almost no point in looking at numbers for the Swissy, because all the Swiss National Bank want to do is manipulate their currency so it doesn't get too expensive. So what you need to look at with those guys is how much have they got in foreign currency reserves. That's what, well, so I shouldn't say that's what you look at. That's what I look at. What are they continuing to do on the kind of foreign currency market? Because if their numbers are too good and the Swissy starts to appreciate, then they're going to try and get involved in the valuation of their currency by manipulating the foreign currencies that they've got in reserves. So it's even that is another sort of aspect, another layer. When you're kind of looking at fundamentals, you do have to break down the data, but the numbers don't lie. But what they do with the numbers does kind of catch you off guard sometimes.
Also, given that, you've now got to take into consideration, I don't know what it means from a fundamental aspect as to the value of the Swissy, but they've now just opened their books, basically, because of the Ukraine situation.
Yeah.
They're dobbing in people who've got money in there, right? And they've never done that before. They've broken ranks. So whether that continues into the general populace of the world, who knows? But it's certainly historic, because if you had a Swiss bank account prior, nobody knew about it.
Yes, that's
outside
right.
of Switzerland, right?
Yeah.
Well, that's now changed.
Yeah, which I guess that's the rules of war, isn't it? Is that there are no rules. You can pretty much do what you like.
There's no winners either. What a prick of a thing it is.
There won't be any winners in this. I mean, I've got so many friends that are concerned about nuclear war, and I keep trying to say to them, look, if that's to happen, then there's no point in even thinking about it.
Don't worry about it too much. You just go to sleep.
They just got to sleep, certainly, because that, if it's happening, it's happening. What I think is probably most likely is that it will be an economic war like no other. That seems to be where we're going. Businesses.
Well, we're already seeing that, aren't we? I mean, I've never seen these sanctions as heavy as I've seen them before.
Well, it's the businesses that I think are amazing, mate. Whereas before we had, country by country economic sanctions, this time we got, as we all know, the banks are pulling out, McDonald's are pulling out, Coca-Cola are pulling out, IKEA are pulling out. So these big companies are pulling out of Russia. and effectively doing their own kind of form of sanctions against the nation, which is not government driven, and I guess this is where social behaviour has changed. So I think it's probably, I wonder whether World War III will be an economic war rather than a one that is
well, let's hope
driven
so.
by nukes. Yeah, I mean, I don't know Vladimir Putin's, and this is the other thing, isn't it? You know, I
that
get
won't sit well with him.
No, it probably won't, and I get sort of like these feeds saying, he's mad enough to do these nukes, but it's like, well, okay, that's only one person's opinion still, or a couple of people's opinion. Is he really? Is that really what he would do? He's got children, I'm pretty sure. So that's got to potentially be on his mind as well. But I don't know. Anyway, it's not really worth going down that route. But I do think it's interesting that the economic sort of aspect of this conflict, which has taken shape, and I wonder whether that might put enough pressure on everybody globally to sort of like go, let's just calm down. But Russia could be, this could take decades for them to recover from.
Well, if at all, frankly. I mean, they're a big place. I know that, but gee whiz, how much can a country stand of being completely dismissed by the rest of the world? I don't know. I really don't know.
Yeah.
And I'm probably one of the last people you would ask to answer that question, because I've got absolutely no idea. Zero.
No.
And I don't think too many have, frankly.
No, I agree, mate. I agree. Yeah, you've got to sort of question when people tell you this is what's going to happen. We can only surmise and have an opinion, which we do need to have if we're trading, but we can't know for sure. Anyway, mate, let's push out of here. And
hey, by the way,
yeah,
happy birthday for what was it, Friday or Saturday?
Thank you very much, mate. Yeah, do you know what? I went go-karting yesterday. Absolutely brilliant.
Yesterday.
Yeah, no. I kind of had a whole weekend of it. I woke up on Friday to a nice breakfast in bed, and then on Saturday we took my little daughter swimming, and had a little cafe lunch somewhere. But then yesterday I went go-karting, which so what the agreement that I've got with my girlfriend is that we try and arrange, rather than like a present, like I don't know, a Giorgio Armani jumper or something. Yeah, we do an experience, exactly. Because when you're a kid, the best thing about when you're younger is the party. It's not about the presents necessarily. Some of the presents are all right, but it's the party because it's an experience. So we agreed to do that. So I went go-karting yesterday, man. It was absolutely amazing. It was really cool. These things go 40 miles an hour, which doesn't sound a lot, but when you low down close to the ground and sort of doing handbrake turns and stuff, it was brilliant.
You bet. All right, listen, everyone should have a great trading week. I hope so.
Yes, have a great week. Yeah. And I would be looking at the market. Certainly right now, it looks very, very rangy. So if you do not like ranges, then this isn't the day to trade. If you like ranges, then look for the tops and the bottoms, I would suggest, and you'll probably be okay.
Now you're talking. Just got to be in front of the charts at the right time. That's the problem.
You do. Yeah.
Anyway, it is what it is. Mate, have a great week. And everyone who's joined us as trading buddies this week, thank you for that. And thank you for the questions, everyone, in particular, David. I hope that's helped you. And we look forward to your company again on Thursday when we will do it all again. Have a good week, mate.
You too, buddy. Thanks, Paul. See you soon.
Those of you in the Slingshot group, by the way, we have Q&A at 7 p.m. Singapore, Hong Kong time. Hope you can join us then. For everyone else, thanks for being our trading buddies. Have a great week. Bye-bye for now.